All right, so this is where we're going to spend the majority of today, okay? And I want you guys to remember, obviously, whatever we're looking at today does not necessarily mean that you should go out and buy these stocks or they're good investments or they're going to do well, regardless of what I say or how great the trade setups are or whatever. You know, we're just looking at them. Now might not be the perfect time to enter. Obviously, we'll get into all that. Spoiler alert. The most important thing, though, is just to have these on your radar. So we're going to look at a bunch of key names today. And I highly recommend that you guys, either scratch them down, put them on your favorites list, your watch list, whatever, etc. So, and they're in no particular order. And obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. All right, so we're going to look at uranium. This is just the futures market for uranium. So it looks a little funny, obviously, just because, it's not the type of market that has like a ton of trading taking place. It's not like people are like getting uranium and like having it physically delivered or whatever. But clearly in a bull run for some time now. Been very bullish on uranium the whole way up. We obviously saw a massive burst when Sprott came in and started buying up uranium. At that point in time, we basically have put in a peak, the 821 cross back to the downside, and we have been bouncing on the 200 exponential and simple. Okay. So I know everybody is like really, really bullish on uranium right now, and there's all these bullish catalysts, and there's like news that, the US is going to stop getting uranium from Russia, and there's all this stuff going on, and now everybody's like FOMOing into uranium. I mean, not to be like a contrarian, but typically like when everybody's talking about something, it's probably already over. So this was our like pretty clear resistance right here. Pretty aggressive move down. And then from the next peak right there, we kind of had formed like another couple resistances. And now here we are kind of like creeping out. We kind of bumped our head here one more time, and then we're just kind of going sideways. What's important to notice, though, is the 200 exponential is barely blue, and we're in between the 200 exponential and the 200 simple, and 200 simple is on top. So while we could still get an aggressive move to the upside, we know that typically when the 200 simple moves on top, that's the end of the trend. It's running out of steam, it's getting tired, and it's getting ready to roll over. Sometimes you put in a new high after that, sometimes you don't. Also, this little pattern that we're seeing right here that we just drew in, I mean, I know everybody wants to get like, super bullish on uranium and everything, and I don't blame you for it. And look, I was talking about uranium before. I mean, I'm not going to say I was like the first person ever to talk about it, but I hadn't heard anybody talk about uranium in like 20 years. Okay. And if they did say something about uranium or just commodities in general, it was like how bad they are and how terrible they are. So the last thing I'm going to do now is like get super bullish at the wrong time after we've been bullish in advance and done really nicely on the uranium stuff. Whoops. So what do we have right here? In my opinion, this looks like a bearish setup. I mean, this is a descending triangle. So we peaked out, we come down, we have basically a flat support, and we're just oscillating here. And we kind of just like poked our way out of the top right here, kind of going sideways. So like in all reality, should it be something more like this? Is it just not going to be like a perfect triangle? Should we actually be like drawing the triangle like this, off the bottom right here, and then there, and then there? I mean, there's a million ways you could draw it. It doesn't really matter. The most important thing is, what does it look like? It looks to me like a bearish pattern. A flat support, descending resistance, and then maybe a little throw over, and then it drops. I don't know. It doesn't look particularly great to me. And we know this is a long-term play. I mean, something that would be like viable like for 5 years or 10 years or 20 years or 50 years. So it's not crazy to think it could have an aggressive pullback. Now, it doesn't have to, but it could. So here on the weekly, we crossed bullish on uranium back in March of 2020. You guys know I've been extremely bullish on uranium the whole way up. And, we basically sold the top almost perfectly. So it is possible we'll be wrong and have to get back in it, somewhere closer to our price. But that's fine because we de-risk this whole time when it just dropped down right here. So even if we did buy straight back wherever we sold, we avoided a ton of risk. Now we do have a hard buy signal, and leaving the bearish control zone, we do start to roll up here on the histograms. So there's potential. We're back testing 8 and 21. There's potential here. But also a lot of times what will happen is we'll see something like this where it looks like we're about to cross back up and then we just go lower. So when we go lower, where do we likely head to? Probably like $42, somewhere around there. You know, is it time to start looking at like macro fibs and, you know, trying to see what's going on here? I mean, I think so. I really think so. If we go from the zero down here, the bottom, all the way to the top, and we look at this run up, you know, sure, maybe that's not like the macro top, but maybe it is. And we came down to 236 almost perfectly, and that's basically like our support that we're kind of hanging on to. So if we break down from there, we have the 382, we have the 200 exponential and 200 simple, and I would expect 100% a bullish bounce from that level, if not like the actual bottom to come in around them. Now, we don't know which one it's going to be or even if it will happen, but that's my target. And then obviously, you know, we have the lower target down to the 0.5. I am still very, very bullish on uranium in general. I still have quite a few positions open in uranium, but those positions are just like leftover profits that I never closed. So you guys know my strategy is to basically take a position in something or swing trade or scalp or whatever, and then I will take back my money once it moves in my direction. And because these uranium stocks, you know, obviously this is the physical uranium actual, but because, you know, some of these uranium stocks moved 100, 200, 300%, you know, we took out our initial capital and now we're just playing with the market's money. So I'm less inclined to just sell them off because, you know, you just kind of set it and forget it. But it is what it is. It's never a bad idea if you think something's going to go lower to take out some more profits. So I may be doing that in the very near future. And we'll talk about that because I wasn't expecting this big push up here in the last like day or whatever. And we'll see. I mean, I think it might just roll right back over. So that's what I'm seeing on the weekly. Again, still very, very bullish on uranium, but I just don't, now is just not the time, in my opinion. When we look at our monthly, again, what are we hanging on to? Not just that 236, but the 8 on the monthly. So if we do lose this level, where do we come down to? 42.60. And what does that line up with? That's our 21. And then slightly below that is the 382. And we also have this massive gap from Sprott coming in and loading up in SPUT, their uranium fund. And that lines up perfectly with a 0.5. So it's not crazy to think. I mean, this could be a breakaway gap and we just go to the moon and we just get our nut and it never comes back. Definitely a possibility. But also it's a possibility that we come back down, close that gap. That's actually the bottom. We retest key support and then we skyrocket from there. So again, you know, people are forgetting uranium has been a dog since it peaked out in 2007. And now all of a sudden it's popular, it's exciting, it's the pretty girl at the ball. I don't know, man. And when we look at the peak right here at the top to the bottom, we have a perfect 618 retest, the golden zone. Does it have to be the absolute top and that's it? No. But is it likely we at least come down one fib, maybe two, back down to the 382 in yellow, which also lines up with the 382 in green, which also lines up with that green box that we just put in there, which also lines up with the gap. So at that point in time, there's nothing holding us up from dropping down. There's just a lot of confluence there. Hard sell signal, bunch of red histograms. I'm just not at the point right now to get bullish on these. Matter of fact, I'm the opposite. The more I look at this stuff, the more bearish I get short term. Very, very bullish long term still. And that's not going to change. All right, so now let's look at our actual uranium stocks. So we have a bunch of producers, like mines, refiner, like just a whole plethora of like uranium, and then also nuclear stocks, as in like power plants currently operating, some more speculative. There's just a whole blend of them. Okay, but we're just gonna go through. I mean, we have the basic picture just from like physical uranium, but we're gonna go through some of these other stocks. Some have like really good history and long history. Others have very, very short history, including like brand new IPOs. So we're gonna get varying levels, but I have a feeling that when we look at them all together and everything, we'll get a big picture and have a much better idea as to like, you know, what's really going to happen here. So, and again, you know, I'm not like particularly endorsing any of these particular stocks or ETFs or anything like that. I'm not recommending that anyone buy any of these or anything. I'm just pointing out to you guys a bunch that I have either current investments in, have invested with in the past, or intend on investing to when the technicals line up. So, all right, so let's take a look. And, you know, again, we're skipping through all the rest of our junk today. I'll probably touch on crypto. I'll do at the end, I have a bunch of requests from last stream and then a couple of my own that I tossed in there too. Again, energy and commodity focused. But there's somewhere around like 10 of these that we're going to look at. And the first like 3 are ETFs. So, obviously if you want a little diversification, the ETFs are the way to go. And many of the individual stocks we're going to look at are actually inside of these ETFs. So the first one we're going to look at is ticker NLR. And this is the Van Eck Uranium Nuclear Energy ETF. So, all right, hang on one second, guys. My bad. My allergies been acting up a little bit lately with the season change. So I start sounding like a little bit raspy. Stop sounding like a 16-year-old. I know that's what you guys tune in for. So NLR, Van Eck Uranium Nuclear Energy ETF. So this one is composed of a bunch of big names. So we have Dominion Energy Inc. We have Duke Energy Corp. We have Constellation Energy Corp. We have Public Server Service Enter. We have Entergy, Entergy Corp, which actually we're going to look at anyway. We have PG&E. Again, we're going to look at that one. Quite a few of these are on the list. So we have Pinnacle, Westcap, and we have Cameco are like the top holdings in this. So a bunch of the big names that were otherwise buying individually anyway, or individually looking at anyway. So like always, first thing we want to do, zoom out and go to the long-term chart. And obviously we can see, topped out back here in 2007. So we have really nice history on this. This is the most important thing. Most of the charts we're going to look at today, we won't have this data point just because a lot of them are newer since then. But again, this is going to look very, very similar to, the overall like energy or the uranium spot market. So here we have this ridiculous wick right here. So, we have to obviously see, okay, is that wick more realistic with it or without it? So we see if we use the wick, we're basically back at the 0.5 and we see some pretty good confluence at the 382 and the 236. If we don't use that wick and then we only use this one, we see basically support at the 236 and resistance at the 382. So it could go either way, to tell you the truth. Which one is the correct thing to do? Again, whenever we have a crazy wick like that, scam wick, I like to look at it both ways. But I think realistically, we just, basically look back at the actual uranium chart and say, okay, is that more realistic or not? So here we see the low on this chart is from 2016. And then if we just go back to NLR, obviously this wick was in 2010. And then we have our low here in 2020. So kind of a little bit different of a scene here. Could go either way, kind of telling us a different story either way. But regardless, we have a couple levels. We can use them. I would prefer to just ignore this massive wick right here and just use that one. I think likely that's what most people would do. But I could see an argument for either. And as the chart develops or whatever, we could potentially do that also. So then, next thing we can look at is, okay, does it look like this is topped out? Does it have that same like blow off top? I mean, obviously not. So does this look like it's done running? Not necessarily. And we're kind of butting our head on the 382. Like we've hit it enough times that actually this looks like it could break through. And the next target would be that 0.5, which would be around like 68. So again, this is kind of telling us a little bit different of a story. And part of that is because of the diversification in it. Obviously producers and actual like nuclear power plants are going to have slightly different, there's a lot of metrics that goes into it, labor costs, diesel, fuel, like all the different stuff that one might need more of than the other, etc. So that being said, we're back testing the 382. It looks like potential target to upside would be the 0.5. And then it looks like, if we pulled back, we would pull back to 236 and we're right at the 382. So we know we're one fib up and one fib down. And it could go either way. Seems like a coin toss. I would give a slight bias to the upside based on the 821 bull cross and, banging our head up against the ceiling here. But it is very difficult to trade right off of a fib line when your target's going to be the next fib down or the next fib up. So realistically, if we were looking for potential continuation, I would look for that previous low on the monthly right here as our potential like stop loss or exit. 7% downside. Assuming we're just looking to enter into the trade right now, that gives us 18% upside, 7% downside. And that is a roughly 19%, 19% upside, 7% downside. So roughly like 2.5% risk reward ratio. So, there's potential there. Obviously it's not great, especially after the recent move. And I'm not convinced that we just shoot up right here, but there's definitely some potential. And then obviously we see what looks like potential, bullish reset potential on the stochastics, and we're above the slope line, green histograms. So, this actually looks okay on the monthly time frame. And then if we go to the weekly, it looks like, we had a couple times where we tried to confirm into the bull trend. We then put in a new low, again, kind of ignoring that wick. And then we basically have gotten back on top of here. And it looks like now we're starting to diverge away from the 200 simple with the 200 exponential. So it looks good to me. Hard buy signal. We're trying to break back above the red slope line here. So it looks like there's definitely some potential for another, 20% move. And at that point in time, do we get the move up to the 618 and it starts looking more like the traditional uranium chart? Definitely a possibility. So, while we're going to look at the overarching, look of these uranium stocks and the sector in general, focusing on like the two main parts, like nuclear power plants and actual like producers of uranium, we have a potential like 41% if we backtest the 618. So this to me, looks a lot better than the actual uranium chart does. So maybe one of them's lying. Maybe it's the difference between what's in the ETF compared to like spot. But again, looks a lot better in my opinion. And then again for the daily, above the 200 exponential and simple, looking a little shaky right here, looking a little toppy. Inside the bullish control zone, hard sell signal, we're breaking down. So, obviously to me, this looks like short term, again on the daily, it looks like we're ready to lose this level. Again, a bunch of red histograms. We just got a little tick up on that squeeze. Is this an exit pump? I think there's a good possibility it is. So we don't want to get overly bullish on the shorter time frames so far from what we've seen on either of these. But mid to long term, both look very good, obviously. So next is URNM. So this is the Sprott Uranium Miners ETF. Let me pull up the composition for you guys. And you can go look this stuff up on your own. But, try to give you the full service. Obviously, I don't do very much preparation in literally anything, including these streams. And by I don't do much preparation, I mean I don't do anything. But here is the top 10 holdings of URNM, the Sprott Uranium Miner ETF. So obviously this one more focused on the miners, doesn't have the same, nuclear power plants. So we have NAC, Kazatomoprom. Bear with me on the pronunciations. We have Cameco again. Sprott Physical, obviously, is what we were talking about earlier. CGN Mining, Yellow Cake, NextGen, or NextG, Denison Mine, and Energy Fuel. So quite a few of them, again, we're going to be looking at individually. So ignore all of this junk. So you guys know, obviously, that we had found triple bearish divergence right here on this triangle, and we exited our position basically like at the top after like an epic run to the upside. And then we had the descending channel. We broke out. We got the measure move. We then put in a lower high, and since then I've been pretty bearish. Broke down, back tested, and clearly below the 200 exponential and simple. Now this recent move up here got everybody excited, but what really was it? I mean, just the back test of the 200 simple when previously we had just hit the 200 exponential. So in my opinion, this looks like it's ready to roll back over and confirm into the bear market. Now, it doesn't have to happen, but I mean, look at this knife stab. Literally went from the bottom of the range all the way up to the top of the range. I mean, like in one day. Left the bearish control zone in a single day. Purple Stoch still angled to the downside. Blue Stoch trying to turn up right here. Again, this looks very much like an exit pump to me. Left a nice gap behind right here. So maybe we just come back, fill the gap, and then we can creep on up. But this looks very much like an exit pump to me. Okay. So we'll see. Let's go to our longer time frames and take a look. So like I was talking about earlier, Some of these we're going to have like really, really good, history on. Others we're not. So this was December 2019. We have essentially no history. So doing a longer term time frame look at this, it doesn't really do us any good. Obviously, we see bearish momentum as we just kind of trend like down to sideways. I think probably what we should do on this one is pretty limited on the longer time frames. But I think probably we should look at something like this. Arguably, maybe it should be a little more like that. Maybe we should be using the wicks instead. I mean, there's a lot of ways we could draw this, I think, and probably come up with a decent setup. But this looks like a descending channel to me. Now, again, typically when we break out of this channel, it would be a bullish break. But, we could easily come back up here, another lower high, roll over, keep going forever. And then finally we get the bullish break and it takes us to new highs. But again, right now, we're not getting the idea that this is just suddenly bullish, in my opinion. On the weekly, we have the 821 have been crossed to downside bearishly. We tried to get it back up here. We fell back down. We did put in a higher low here, and now we put in a higher high. So we have a little bit of like a little macro or a little mini micro uptrend right here. But the truth is, same situation. We don't want to get overly bullish right now with this one candle, because the last time we got a big candle like that, we immediately broke back down. So, if the 821 crosses back to the upside, it's going to look a lot juicier. Maybe buy the back test. But this one not looking particularly bullish to me. Hard buy signal coming out of the bearish control zone. That's definitely good. Couple green histograms. That's good. Approaching the zero line, approaching the slope line. It is still red. So, I'm not like overly bearish on uranium right now, but I'm also not overly bullish. And again, when we look at this on like the weekly time frame and we look at our channel, what are we doing? We're just trading the range. We're just oscillating between the lows and the highs. And the truth is, if we get back up here slightly higher to like 81 or something like that, I'm going to close out some more of this position and just take some more profits, because it's just going to look like another lower high, and then we break down. And if I'm wrong and we shoot back to the upside from here, I'll just buy in slightly higher on a confirmed breakout. So again, like, not trying to rain on anyone's parade here. Obviously, we had some nice moves like 10 and 20% pretty much across the board on these. But again, I mean, if you're thinking about buying right now, just know that I'm going to be selling. So just a heads up. All right, so let's go on to our next one. So next we have the we have URA. This is the Global X Uranium ETF. And let me just pull up the composition right quick. All right, so some of the top holdings on this one. Again, you're going to recognize some of these names. Cameco, Sprott Physical, NAC, Kazatomo, Japanese word that I can't pronounce. NextG, Energy Fuels, Denison Mine, Yellowcake. So a lot of overlap with these things, obviously. And that's just like some of the bigger holdings. There's plenty of other stuff in here as well. So, okay, so for the Global X Uranium ETF, let's go ahead and, start on the monthly here. This one we have back to 2010. So 2007 we know is like the peak. This is obviously a few years later. So we would assume, that there would be some more history and it would be higher than this, obviously. So it's a little more difficult to do a fib from the top to the bottom, just because we're like kind of missing some data. But when we do it, it does give us a decent picture. We basically had to move up here to the 382. Obviously, you guys know I got extremely, extremely bullish on URA, and we got into it around like $11. And since then, it basically mooned. I mean, it went to 30. So it did almost, a 3x. And we got out basically at the top. So again, we still have some leeway here to get back in if it continues to the upside, but I'm not even concerned about getting back in at a lower price nearly as much as I am about just not taking the downtrend. And, also obviously it's been, almost 9 months or 10 months or something. It's been going sideways to down. So we've been able to use that capital in a million other places in the meantime. But you guys know my overall view on this is that we actually just put in a 1, 2, a 3, 4, and then a 5. And then this 5 waves makes up the 1 of the macro blue wave. And then actually the 2 retracement, which would be from the bottom, this green fib here, to the top. We already broke down below the 236. we tagged the 382 perfectly. So maybe the bottom is already in and now we're getting ready to go to the upside. It's definitely a possibility. But I actually am expecting a touch of the 0.5, which lines up with that macro 236 in yellow. So maybe we don't get that target, but that is still what I'm looking for. Again, and as long as we're in this descending channel, it seems like that's highly probable. And then on the monthly, we know hard sell literally at the top, left the bearish bullish control zone. Stokes have been trending to the downside. That's great. We're just refueling to eventually go higher, but it could last for months. Bunch of red histograms approaching the blue slope line. We would expect it to bounce when we get to the blue slope line or the zero line. Doesn't mean that that is the bottom, but we would expect at least some kind of a bounce. And then we go to a shorter time frame. Take a look at our weekly on URA. I'm going to turn off the drawing tools for a second here. So I was talking about this potential kind of like resistance right here. Now we really only had like this wick point right here and not really like line up right there. And then we're talking about, basically just lower highs right here. That line is basically useless. The most important one is the high, the lower high, and then, potentially another lower high. So I don't know if we're going to see a little more continuation, possibly do, but that would be our target to sell into this rally with some more of our position. And again, that position is just leftovers. It's just like some profits that we decide to just let run, just in case we are wrong or, whatever. It's never a bad thing to just keep some of your profits in what you make those profits in for and just let them ride. But again, we don't want to be so reckless that we're like, oh, we're so up on this. I don't want to take profits because it's definitely going to the moon. And then this happens, and it sells off from 30 all the way back down to, 17, gets cut in half. And instead of having a bunch of profits on the sidelines that we could put back in whenever we want, and then some still in play, we basically just give back half the move. So on the weekly, hard buy coming out of the bearish control zone, bunch of green histograms approaching the zero line, approaching the slope line, trying to cross the 821 back to the upside. So again, there's potential here, but just keep in mind, this is the back test of a 200 exponential, and we would expect, a dead cat bounce lower high. So this is clearly still a downtrend. We have a high, we have a low, we have a lower high, we have a lower low. I fully expect another lower high and then another lower low. And then the real level I get interested at is the 200 simple. And, where's the 200 simple line up at? Somewhere around the 0.5. That's our macro target. And again, the beauty of the charts doing what we tell them to do or what we expect them to do or what we make them do, however you want to look at it, however much power we want to give ourselves and our magical TA / 8 ball of wisdom. I mean, the fact of the matter is it's so much easier to trade and so much more profitable when you just let the market come to you. And obviously our first target was that green support right here. Did not end up taking a scalp on this play because we took it on some other ones instead. So much less likely. Short-term plays on ETFs are much less likely to hit your targets and play out exactly how you want as opposed to individual stocks, because like one stock could be a complete dog and then like one could overperform and then a bunch of other ones could do either underperform or overperform. And so you don't get the same beautiful TA that plays out the same way as an individual stock as you do with like some of these ETFs on stuff like uranium where they're a little wilder. Now if you have something like the Dow Jones, massive market cap, big companies, like you're going to get some reliable moves. Then we just switch down to the daily. What is this? I mean, it just looks to me like, what are we doing? Bull trend, rolls over, lower high, breaks down, back test, bearish market concern, confirm, new low, another back test. Maybe we tag the 200 simple where we failed. Maybe we bust above it and somebody needs to exit out of their position at a slightly higher price. Again, look at that knife. Went from literally all the way at the bottom to through the roof. Does that seem sustainable? I don't think so. I do not think so. And what does this look like? The dead cat bounce off the zero, off the slope line. Again, I'm loving uranium long term, but we're getting a pretty clear picture now, in my opinion. So on to our first individual. So this is CCJ, obviously Cameco, and Cameco is the biggest player in the space basically. So there's quite a bit going on this chart. I'm just going to get rid of all this stuff and we'll just kind of take a look at what's going on. So we have our high here, obviously a low. We put in a lower high here and then we actually put in a higher high right here. And now, we're threatening that previous high. So we're not getting as clean of a picture as we did with like the descending channel. If we go any higher right here, we probably threaten the previous cycle high. Excuse me. Again, the knife through the roof right now, bouncing the zero, bouncing the slope. All of this in a single candle, probably not that sustainable, realistically. But definitely the most bullish of what we've seen so far on the daily. When we look at the monthly, we basically have broken above the 200 simple, back tested it a couple times, and now we're holding on. If we take out our monthly or our cycle high here at like $30, it's going to look pretty good. And it's going to look like we're coming back to retest 41, if not, the previous high of 52. So, but it does look good on the weekly time frame. Again, we just got to be careful because maybe just not right this second. From the peak right here to the trough right there, we have our red fib, and we basically came up perfectly the back test of the 786. And then from there, we basically broke down somewhere in between the 0.5 and the 618. And then if we just put in one bullish fib right here, again, we'll see we're getting like some pretty clear price action. We're basically back testing the 236 right now. Likely target if we keep going down would be either the 0.5 in red or the 382 in green right here. And then we obviously have the 0.5 a little bit lower as well, which is our final form target. Now, do we get there? Maybe not. It lines up with the 382 in red around $13. I don't know if we get cut in half again. I think it's likely, though, we do get to swoop this up at 17. So we'll see. We'll see what happens. This one definitely looks better than most. Hard sell. Obviously, Stochs are trending to the downside while we kind of go sideways. Bullish reset, maybe. Still mostly green histograms, blue slope line. Again, Cameco looking, and it has been looking, substantially better than most of the other players in this space. 200 exponential across above the 200 simple. You guys know I got very, very bullish on Cameco right around this area, the end of 2020. And we rode it up nicely. I mean, again, this one did almost, I think it was like over a double. 100 and, just over 200%. And again, we saw that same like double top bearish divergence between the peaks right here. It wasn't as clean of a chart as some of the other ones were on the bearish divergence, but still ended up playing out very nicely. So not crazy to think that we back tested 200 exponential or 200 simple. And again, where do those line up with? Right around our key fib levels. So, again, really liking uranium. Cameco looks much better than most in the space, but just not the time right now to be getting bullish, in my opinion. So UUU is next. Energy Fuels Inc. So Energy Fuels obviously in quite a few of the ETFs that we discussed at the beginning. So on the daily, actually, let's just switch over. Let's go to our monthly. So we had that initial bump up right here, and then it failed, and then re-entered back here at about $2 on UUU. And then from then, obviously, had a pretty parabolic move back to the upside. Took some profits along the way. Again, still have a partial position open in this. But so far, seems likely after we put in our high right here, low, lower high, lower low, seems likely we just put in another lower high and then continue down. We are attempting to save the 821. We know the last time that happened, we got a pretty aggressive candle. So I'm not looking to get stuck in this on the move back to like 365. Because basically like a 50% drop from where we're at. If it happens. While we're here on the monthly, if we just look at the macro, again, like it sounds like I'm not bullish on this stuff, but I am so fucking bullish. I'm the most bullish person ever in the uranium space based on technicals. Not just like, a dream, a wish, and, a rainbow leading me to a pot of gold. No, based on actual technicals. We know from our high right here, 2007, this is a good one because obviously we have the peak. That was like the all-time high. Now, is it funny that this literally comes online in 2007 at the maximum all-time peak? Sure, of course it is, right? But, that's how you know. That's like the Bitcoin ETF coming online at the 2017, 2018 peak. But anyway, Quad U, basically all the way to the downside, massive move down and bottomed out here. And then at that point in time, we basically started into this potential uptrend. We made it not quite to the 0.5, but pretty close. But again, what I'm looking at right here is the potential that this is a 1-2, a 3-4, and then the 5, completion of the 5-wave structure. And then in green, that's our 1. We're in the process of our 2. We arguably got close enough that, okay, maybe I'm wrong and we don't hit the 382 and that's it. But if we look from the bottom right here, that is our fib to the top right here. We hung out at the 236 shortly, put in a lower high, rolled over and broke down from it, tried to reclaim it. Seems very likely we end up at the 382, or we have this potential trade setups from the 0.5. Now, maybe what we want to do is start entering at the 382 and then continue entering like along the way down to the 0.5 in case we don't get it. But I mean, when you look at these trade setups to the upside and the potential that we have here, I mean, it's ridiculous. So the first trade setup from the 382 or from the 0.5, depending how low we go, would take us up to the 0.5, a slightly higher high in yellow. And that is like a 359% upside from a slightly lower target. I mean, it's down at like $3. So we're already at 7. So it's going to look better than it is if we don't get down there. But depending on where we take the entry from, the risk reward is going to be phenomenal. But 359% upside with a stop loss that we can't see. With a 23% stop loss, 15-to-1 risk reward ratio. So obviously really nice. And then the second trade setup would be, instead of just topping out the 0.5, would be the internal retracement of the 618, which is basically what we saw earlier on in the stream. So that takes us up 800% from that entry. Now, again, we might not get that entry. Maybe we only get the entry off the 382, and then all of a sudden it's only 544%. I know, it's like, do we even get out of bed for that? I mean, I guess, right? If we don't have anything better to do, we'll take a 500% upside trade, maybe. But 800% upside potentially if we get our entry that we're looking for. Stop loss again, 24%, and that's 33.5-to-1 risk reward ratio. So this is how we get our nut. Okay, I talk about this all the time. Asymmetric returns. Okay, I know that normal human beings like can't calculate asymmetry because it just sounds so ridiculous. And I know, like, people, I'm not even gonna point names at like dumbass like technical analysts or traders or fundamental people, or I'm not even gonna get into all that. The most important thing is that these are the ones we're looking for. We're looking for things that are legitimate companies or stocks or industries or whatever with asymmetric risk reward. Okay, so is uranium and nuclear likely to be bigger in the future by market cap as like an entire space, or smaller? I would say bigger. And a matter of fact, when I was saying that a couple months ago, or a year ago or whatever, you might not have believed it because of the green energy movement. And, obviously nuclear is bad. But now all of a sudden, what are we hearing? Well, now it's, actually nuclear is green. And it's like, oh, really? Did you just discover that? And it's like, oh, all of a sudden we don't have to worry about, nuclear meltdowns because, things have changed. I mean, how many years have gone by? Everything else got more technically advanced. So, like, there was no advancements in nuclear power in that time? Oh, there was? Okay, obviously. And then, we looked at the metric. I think I pulled it up on stream one day, or maybe it was in the group, and I posted up, like, the world map of all the nuclear reactors that are currently online, and then the ones that are currently being built. And obviously, we know it takes about 10 years to build a nuclear reactor, give or take. And there's literally more nuclear reactors being built right now worldwide than there is online. I mean, I would say that's probably a pretty bullish signal for something that's been, essentially in a, 15-year downtrend, basically. Now, again, does that mean right now is the best time to enter? Maybe not. And then obviously the third trade setup we have right here is just the back test of the 786. And that one is 2,228% upside. We still have that same 24% stop loss. And it's like it's not bad trade setup. 94-to-1 risk reward ratio. I mean, I'll take it. I'll give it a shot. I'll give that one a shot. So, I mean, it's not bad. It's okay. Put $1 in it and, it turns into 22. It's not bad. I mean, you can do the math on that one. How many thousands of dollars do you have to invest in something to become a millionaire? Or how many, tens of thousands do you have to invest to become, you get the point. You get the point, okay? So asymmetric returns. And then realistically, when we really zoom out and look at this, I mean, what are we actually looking at? Again, this is our 5 waves, and it makes up the 1 in green. That's our 2 retracement. Maybe it's already done. Maybe we get all the way down to our target. We'll see. But then that takes us up to our 3 is the internal 786 retracement. So it's still not even a new all-time high. And then that brings us all the way back down to the 0.5. That's our 4. We reload. And then what do? I mean, we crush it. Because the real target is $244. I didn't even put a trade setup in for there because it's just so ridiculous. But if we go from $7 to $244 and you're not rich, I don't even know what to tell you. You either didn't invest enough money or we have two completely different ideas of what rich is. But I mean, it's, just the potential here. Again, nothing's guaranteed. Maybe we don't use uranium in the future. But again, I like my odds. The risk reward ratio on this is 8,118%. And the, same stop loss, whatever. Obviously, this is more of a investment or position than like, a scalp or whatever. But we're talking about 334 to 1 risk reward ratio, or even 100 to 1 risk reward ratio. I mean, there's some serious potential in this space. So would I say you're crazy if you just say, F it, I'm just going to start dollar cost averaging for like the next like 10 years and I just don't even care? I honestly, I wouldn't even be mad at you. I would be like, okay, that actually like makes sense. That's fine. But are you ready though? Because we are just now confirming, I'm on the daily now. We are just now confirming into the daily bear market. So we had a top, back tested 200 exponential and simple, put in a double top or lower high, and then the 200 simple went on top, and then we got rejected. We're now basically confirming into a bear market. This is our 200 simple retest, and then likely we continue on and go to new lows. Where does that low take us to? Is it the 382? Hopefully. Is it the 0.5? I mean, look, I never will be like I'm going all in on something or anything like that. It's just moronic, idiotic, whatever, because you will be wrong, and that's how you get wrecked. But I will be loading up on uranium stocks if we do get the deep retrace that I'm expecting. So that is you. All right, so next we have DNN, Denison Mines. So again, we'll see a bunch of these names are in a lot of the space that we've been talking about, or in the ETFs we've been talking about. So just kind of zooming out here and starting off at the monthly. So we have our 2007. So again, a nice history on this one. Always nice. The longer something's been around for, the longer data and history we have, the better. Because we don't have to worry about like, we didn't actually see any of that because the chart only goes back to here. So actually like some of our numbers are like way off. So here we have from the peak to the trough. I'm going to turn this one yellow. So we bounce the bottom. We end up coming up straight to the 0.5, and now we're back testing the 382. It looks like the 821 are getting ready to roll over. And, obviously the key players in the space, the market makers, are attempting to stop that bear cross from happening. So regardless, we don't know obviously if it's going to happen or not, but again, on the shorter time frames, it looks like there's potentially some short-term downside. When we look at the weekly, this is where we got real bullish on this. Obviously getting above the 200 exponential and simple on the weekly at like 50 cents, after just melting down literally for, 15 years. And then, what does this look like? Starts looking like a topping pattern here. We are at the weekly 200 exponential. Maybe we go a little lower to 200 simple. Maybe this is it. I think we get more of a picture the more of these uranium stocks that we look at. That there is actually probably some short-term downside still in the cards for these. So a high, a low, a lower high, a lower low, a potential lower high. Could we come all the way back up to 0.5? For sure. We could. But after that, essentially the target is the 236 backtest. Maybe we don't get all the way back there. Maybe it's just the 382 in green. Maybe it's the 0.5. But this looks pretty toppy to me. This looks like, a head and shoulders or Wyckoff distribution, type 1 type pattern, something along those lines. Now, if you got stuck in this and like we're stuck upside down in one of these like massive asymmetric potential return stocks for a couple years, like, as long as your position size is right and, you've got balls, so you're not going to like get scared and exit at a loss, you're fine, obviously. But, I would rather put that capital to work somewhere else if the chart is telling me there's potential downside still. So, but the weekly is starting to look okay here, obviously getting a nice bounce. But we know when we hit the 200 exponential or 200 simple the first time, we expect a bounce. When we, everything bounced that weekly 200 exponential and simple. And that's what everybody got really, really excited about for like the bull run to be on. But again, what does this look like? Just a back test as we're about to enter a daily bear market. And again, the knife through the freaking roof on this thing. Okay, next is URG. So UR Energy, again, one of the names in our ETFs. On the monthly here, history going back to 2008 technically. So nice little history. This one is strange that it did actually put in a higher high in 2010 in comparison. Some of these energy ones have other things too, natural gas, coal. It's not specifically all uranium. So again, that's where we kind of see some divergences. Some are miners, some are, producers, refiners, nuclear power plants, etc. So, and again, that's why it's nice to diversify, because if you go all in on uranium and then it doesn't do that great, but like actual nuclear power plant, like stocks do phenomenally well, you'd be kicking yourself for not just, diversifying a little bit. So like anything, I would always diversify it a little. I mean, you can do whatever you want, but I always would diversify a little. So is this trading technically from the high? Beautiful test of the 382 right here. Back test of the 786, 236, back test of the 0.5. So what do we see? Obviously we don't have that target downside until we get there. But along the way, we see, okay, the market, the bots, the algos are using this fib clearly. And then from the low right here, we get all the way back up to back test of 786, which was the previous resistance from the first lower high. What does it look like it's getting ready to happen? It looks like we're getting ready to roll over. And this was an attempt to stop that from happening. 786 broke down to the 0.5, retested the 618. Likely next target is the 382. And we don't want to be sticklers and be too greedy or too stubborn that we're like, oh, I'm not entering a position until it gets exactly to my target where I want it to be, because, I'm spoiled by the market just doing whatever we expect. We can enter a small position along the way, maybe have 2 or 3 entry points, something like that. But here we see the 382 in green lines up with the 0.5, the 236 in green lines up with the 618, and then the 0.5 and 382 are our target down here, right around 70 cents to 75 cents. And that's really where we'd be looking to load up on this. Now, maybe it doesn't get there, but seems pretty probable to me. Again, what is this? Dead cat bounce off the 200 exponential on the weekly. What this looks like the Dow Jones chart, looks like the, all these charts look exactly the same. That's weird, right? And then again, what do we look like? Just, confirming it's a bear market, back testing. Maybe we go slightly higher. Maybe we punch out a little bit. But again, knife through the roof from the bottom of the range all the way to the top. Looks like we're getting ready for, some short-term downside. So just about done with these uranium stocks. So LEU, Centrus Energy Corp. Again, just going to pull the same thing up here. I'm going to kind of speed through these last couple because we're not going to get a ton of data from some of these. So this one goes back to 1999. We see the peak here in 2007. And then from that point in time, looks very, very similar to our typical space meltdown. From the top to the bottom, back tested the 0.5 almost perfectly. We know we've seen some variance as far as how high some of these got. Is it potential that this is our 1, 2, that's our 3, maybe we put in the 4, come down to the 2, 3, 6, and then we get a 5, back test a 200 exponential and simple. Maybe it's nice that we have a 200 exponential and simple on the monthly on this one. So, where's that at? 720. Do we get there from 45 and then just roll over and still go lower? It's definitely a possibility, but I mean, I like the odds. I like the move if we do get that. Again, from the bottom. Oh, I think because I clicked on it. I wonder if my mouse is getting worn out and that's what's going on here. So if we just look at that one, I think there's 2 ways we can draw this one without, being too much of a stretch. So from the bottom to the top, we're hitting the 236, potentially lower high. We already came down to the 382 perfectly, so it looks like this one's pretty valid. So if this rolls over, the next target would be like the 0.5 to the 236. Now, there is a possibility. This is the 1, that's the 2, and this is the 3, in which case we don't want to fib all the way from the bottom. We actually want to fib from this because we would just be retracing first the 1 and then the 2 and then the 3, and then we're looking for the 4. So again, this tags the 382 perfectly. So either one looks valid. I think I would go with this one just because I do like the structure of the Elliott wave taking place right now. Now, is it possible the 382 is done and now it's headed up to put in the fifth wave? And, maybe this is telling us something that the other ones are not. It is possible. Does it seem likely if just this one is telling us something bullish and everybody else is kind of selling something a little more bearish? We'll have to wait and see. I'm going to assume that we get a slightly lower test somewhere around there, and then we get our fifth wave, somewhere around here. Doesn't have to happen, but again, seems probable. If we do get up there and break above that 3, though, I will just take a continuation trade above that 0.5, expecting the 618 or potentially this move here. So, if we take a momentum breakout on this from that high, we're looking at another 200%, which is obviously very nice, or potentially like 800 to like 1200. So it's not like we're like losing out completely if we take the breakout trade. Now, as opposed to if we enter now, it's not that much of a difference. Now, if we get the entry down here where we really want it, and again, the market's not always going to come down to our targets. We want to refrain from being overly arrogant or cocky or stubborn with these targets, because the last thing we want to do is like miss out on an 800% trade because we didn't get exactly the target we wanted. But when we look at the risk reward on this one, this is phenomenal. So let's just say we get roughly the area we want here. Oh my gosh. I'm not going to be able to like grab the little thing on it. Oh, I hate you, TradingView. Oh my gosh. You like have to, when we move it from that high target to like the low target, it's just absolutely ridiculous. I should have switched to a shorter time frame, but it's a pain to try to get like the massive moves to the upside on the short time frame. So instead we have to like fight the TradingView tool. There's probably a better way to do this, but I'm old and stubborn, so I just do what I want. I do what I'm used to. All right, so essentially we're looking at like, again, around 26% stop loss. If we start breaking below the green 618 or like massively below the 236, it's time to reevaluate whether or not we're correct about what's taking place here. But again, the move to the 618, which would be our next target, because we already hit the 0.5, the next target would be 2,866%. And then really what we're looking for is just maybe like one more step up after that and a potential move to the 786 and a back test of the 200 exponential and simple. So, somewhere around this range here. And we're looking at, what is that? It's like 10,000%. It's not bad. It's okay. So you're like, oh, I don't know. Kind of like Apple. And I'm like, show me the chart where Apple does 10,000%. Or like, honestly, if it's a 786, it's actually 11,700%, which is with the 26% stop loss. It's 440 to 1 risk reward ratio. So if you put, $100 in it, I mean, you got like 500,000. I don't know. There's some potential here. No, that's not right. 1,000? I can't do math right now. My brain's malfunctioning. But you get the point. The risk reward ratio is ridiculous on some of this stuff. So we'll see. Could just roll over now though. We want to get a little lower. When we look at the weekly, on top of 200 exponential and simple, it looks pretty juicy. Obviously, don't want to get overly bearish on this one, as the posture is pretty good on the weekly. Doesn't mean we don't go lower though, and this isn't just a dead cat bounce off the 200 simple. And then again, when we look at the daily, got back on top of the 200 simple, pushing up right here. Looks okay for now. It was a pretty clearly like descending kind of resistance right here. Well, I guess we could just use the tool that we already have right there. So just like pretending that this was actually going to like be the resistance, and we'll just double purpose our 3. It would look something along the lines of, that's like the resistance line. And then we basically just broke through it. And then this is our move. So typically when we break through it, we get a measure move back to the upside or whatever. Confirmed into a bear market. We're trying to push back in and get back into a bull market. 200 simple is on top right now, so we're definitely losing momentum on this trend. If we take out this point right here at 52, starts looking pretty good. That is another $7 to the upside, so like 15%. And then obviously we take out the high. That's a big deal for sure. And then that's where we jump in on like a momentum trade. But the risk reward potential, the upside potential on these is phenomenal. So next we have Bhp Group Limited. Okay, so we have a low down here in 1974. We have history going back to 1973. So obviously absolutely beautiful chart right here. We have the 2000 and actually it didn't peaked in 2008, but right around the same spot. And then again, we saw 2011, slightly higher high right there. And then that was our nasty pullback. So we're not really going to pay much attention to like the super old price action on this because it's not that relevant. But just for, confirmation's sake to see like, okay, like how technically is this trading? Well, we go all the way from the bottom to the top. From when we peak out, we come back down to 236 and we kind of front run the 382. So, I mean, I would say pretty good. Pretty good. It's not like amazing. We see some pretty technical moves on the way up, but not like amazing. So maybe, maybe the bots and algos are taking this previous swing right here. Does that look a little more technically sound? From here to here, we end up like, that previous little wick. Obviously, we don't have that in place yet because we didn't put in the high, but that's like a 0.5 retrace, sort of a double bottom at the 0.5 again. That looks pretty technically sound. And then here we hit the 382, get back on top of the 236. So that's probably what, the algos are going off of. And then obviously on the shorter term time frame, if we go from the peak right here to our low, we'll turn that one yellow. And then we again look for, is it technical? Again, from the bottom right here, we see a very technical bounce at the 0.5. We see some support at the 382. We see a very technical top at the 886. We see some support at the 618. We see what looks like a double top. I try to push back up here to stop the monthly from breaking back to the downside. Again, 200 simple on top here. Now, are we just now building up momentum to go higher? Or actually, is this tired and getting ready to roll back over? I mean, we don't know. We don't know for sure. But we do have to be careful, obviously. Especially this one has a ton of, this one has a ton of price action like history. So it gives us a little more of a clear picture. And again, looks a little bit more like what's happening with like gold right now. So trying to stop that 821 from the cross into the downside. Not quite bearish divergence here, but pretty close to it. And here as well. I'm going to kind of speed through the rest of this one. So weekly on top of 200 exponential and simple, looking pretty good. Everything pretty much looks good on a weekly right now, like literally everything though. So we have to be real careful because that's what the dead cat bounce usually does. It makes everything look good for just long enough to trap people. And then again, what does this look like? Confirming into a bear market, back testing, trying to put in a higher high, actually ends up being a lower high off of the weakness in the market on the daily, the 200 simple cross over the top here. Almost come up and put in a new all-time high, and then lower high, potentially lower high right here. Each time we're putting in lower lows. So, we have a high, a low, a lower high, and then we would expect a potential lower low. But inside of that move, we have a high, a low, a lower high, a lower low, potential lower high, and then that takes us down to our macro lower low. And then at that point in time, this starts looking like, a double top, something along those lines, maybe like an Eve rounding top and an Atom kind of pointy top. And then where does that end up taking us? We look at our next substantial fib down, etc. So we'll have to see. Obviously, we're getting a pretty clear picture from a lot of this uranium stuff saying like, hey, these are really bullish long term. We got some nice moves here, but realistically, we probably have some short to medium term downside potential. Okay, so next is SMR, New Scale, Power Corporation. All right, so we only have history from 2020, obviously, which is like not nearly as much as our other ones. We obviously have like a ridiculous bullish candle here in July of 2022. And we have a single candle that was 43% to the upside. So pretty big deal. Shot up a little higher, sold off pretty good, got bought back up. And now obviously 7 days left in the monthly to see how that closes. There's not really anything we can do like technically our only option is basically to pick the peak right here and take it to the low and then look for fib extensions. So if that's our high and this is our low, you know, you guys know my macro target to the upside is the 1.618 always. So what happened? You know, basically this candle shot up slightly above the 1.618 and now it's back testing it as support. If it holds the support, you know, blue sky breakout probably continues to the upside. If it doesn't, it's probably topping out and getting ready for a like pretty nasty retracement. And then if we go from, again, we kind of have like our first little wave up here, a second retracement, and then we go from that pretty clear swing low right there to where we're at right now and say like, hey, does it look like we're peaking out? I'm going to go to a shorter time frame so it's a little more clear what's going on. Does it look like maybe we're peaking out right here? And when we look at the green fibs from the bottom to the top, what happens? We come down to the 236 almost perfectly, retest the 8, and then that was our big push up. And where does the push up stop? At the 1.618. So this looks very, 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 very toppy to me. Okay? Very toppy to me. Now, if we close a new high above 1585, we probably get continuation. And then we look at the 2.0 or the 2.236 or 2.5 or 2.618, whatever it is you look at. Obviously, I like the 2.618 and kind of skip through like the rest of that BS. Maybe the 2.236. I keep it pretty simple. But realistically, what does it look like? Well, if we put in a lower high right here and it rolls back over, the target to downside is a 382. So that's what we'll be looking for. And, you know, based on this chart, it's like, oh, this thing's about to go to the moon. But then it's like, oh, wait, but we have like no history on this compared to like every other chart that we looked at where we have a ton of history. So if everything else is telling us actually there's probably some downside, you know, we should probably trust the little more history that we have on those as opposed to like just this one. Now, it's not always going to be the case. Sometimes you're just going to have one asset just crush. But it looks really likely to come back to like 1250 or like maybe 1184, $12, which is, you know, it's a respectable pullback. But no, if you got stuck in this thing and then it just ends up in a blue sky breakout before long, probably not the end of the world. On the daily, obviously, very, very aggressive bull market, rip to the upside, comes back down. Looks like it's about to get the 821 cross the downside. So what is this? A massive short squeeze? Somebody trying to exit their position because they FOMO bought in at the top? I mean, we don't know until we know. Pretty big volume spike right here. So, you know, is that a volume spike that is the top or around the top? Well, we see a big volume spike right here. And then, you know, a couple days later it peaks and has a pretty heavy sell-off. We see a volume spike right here. A couple days later it troughs and has a pretty, you know, pretty big move after that. Again, big volume spike right here, a day or two before the peak. And then again, the biggest volume spike with the exception of this one, which was like 3 days before the peak. So do we have 3 more days before the peak? I don't know. I mean, it's not always, you know, the most reliable. But when we look at this daily signature right here, we know one of two things going to happen right here. It's either going to get rejected at or around the slope line and then roll over and be the most reliable, most beautiful, my absolute most favoritist rejection, you know, reliable rejection, similar to what gold is doing obviously right now, or it gets back on top here, consolidates for a bit, and then just keeps ripping to the upside, in which case we'll be looking at it for a continuation trade. So the real question is this going to look like gold, get rejected and roll over, or is it going to look like the dollar, reclaim this and just go like, you know, into outer space? My inclination is that it's topping or topped, but either one is always a possibility. All right, so on to a little bit more speculative, you know, and again, some of these are like amazing, profitable companies with, you know, 50 years of history, and other ones are, you know, a couple years old and don't even make money. So keep that in mind as you're looking at all these. And if you're not going to put in the work and figure out which is which and which ones you like and which are good investments and which are speculations, you know, that's what ETFs are for, because you pay someone else a percentage to do the work for you. So, you know, it's up to you. You got to know yourself. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. UEC on the monthly, again, you know, this is just a range bound. Pretty clearly, obviously, we have from the peak here, you know, the trough here, and then we basically have operated in like that meat for the majority of the time. We have a descending channel pretty clearly here. The history on this one goes back to 2006. So nice history overall. And then when we pull up our macro fibs, from high to low. Obviously, we got all the way back up to 886. We got back to the 886 here again. We had triple bearish divergence, and obviously took profits like literally at the top. Obviously, just luck. We shook the 8 ball. The 8 ball was like, sell now, motherfucker, bearish divergence, 3x. And we were like, oh, that makes sense. So that's where we got out of that at. And then obviously had the breakdown. Came down perfectly to 236 in blue. So wait a minute. Sorry. Okay. Came down to 236 almost perfectly in blue. Potential for just another lower high and then breakdown. We're looking to, accumulate somewhere around the 382 in blue or the 618 in red, or potentially the 0.5 in blue would be another potential target as well. We don't want to get greedy on this one. Does it get there? Maybe, maybe not. But yeah. And then these were the long-term potential trade setups. So we said for the back test continuation, that one played out nicely. And then this was if we get a breakout to new all-time highs continuation. And then this is if we end up swooping down at the 0.5. Really, we should take this one to the 382. So we have like 3 different viable trade setups. Obviously, we don't want to just get stopped out at the 0.5 if we're entering another one. Basically, like quote-unquote dollar cost averaging, or like entering a position from a lower entry point. And then our potential targets on this would be, just kind of looking back here, would be a retest of the previous all-time high is like our initial target. And then next would be like the 1.236 and then, 1.618, etc. 300%, 31% stop, 10 to 1 risk reward, or 1,410%, 30% stop, 46 to 1 risk reward. So some really nice trade setups here potentially. And then if we just look at the daily real quick, again, it looks like it's holding on to the bull trend for now. Starting to look pretty weak. 200 simple is on top. We know what that means. It's weakening. Potential that it's going to roll over here. We don't know for sure, but definitely worth paying attention to, especially as everyone is getting like super FOMO for uranium. CEG, Constellation Energy Corporation. So we have back to only 2022 on this one. So like no time frame. Obviously, this is the daily. So there's like nothing here on longer time frames. Hard sell signal at the top of the range. It's holding on to the 8 for now. Target to downside would be the 21 at like $74. Left a pretty big gap down here. I would expect that gap to get filled. It could be a breakaway gap, but I doubt it. So I fully would expect this to come back down to like $55, which is pretty substantial from where it's at. And then if we just look to see how technical this is, like, does it seem like this is the top? Well, the 236 is that initial like gap fill at 68.99. The 382 is basically that next gap at 61. And then the 0.5 is where we gapped up front. So it seems very, very likely that we will be coming back here to fill this gap and hit these like super technical areas. So that's where we would basically be looking to re-enter / enter a position on this one. Obviously we don't want to get too greedy. It could come back to the 382. We could leave that gap and never see it again. It is always a possibility. Breakaway gaps are always a thing, or sometimes a thing, I should say. And then just to get an idea, like, hey, are we at the top yet? Because like we're still at the top and we haven't actually hit the 236. So we could easily just keep putting in higher highs and it's like, oh, redraw your fib. The best way to kind of get an idea or, an educated guess is we'll take our previous swing right here and then we'll just take that down to our lowest low right here, this one. So if we take the peak from, if you're following along at home, April 20th of 2022, and then we take our trough right here. I mean, it's basically like a quad bottom, like 4 touches at July 15th of 2022. And then we look at that for our Fibonacci extension. And what does that look like to me? Well, we're hitting the 1.618 perfectly, which is like always my main target. So we just had a nice move. We hit my target. Does it seem like this is probably the top? I mean, it does to me. So again, that confluence just tells us like, hey, we want to FOMO in at the 1.618. I mean, if you do, I mean, I don't have a position in this one right now, but you would literally would be, buying into someone doing a sell based on my strategy. And there's tons of other people. We see it all the time. Everybody uses okay, I shouldn't say everybody. There's a lot of people using at least some portion of the same strategy that we do, and it obviously works. So somebody's going to be dumping on your head if you're buying up here. And again, looks very, very toppy to me. Very, very toppy. And we don't have longer time frames, so we can't even go to them. All right, almost done with uranium. So UROY, Uranium Royalty Corporation. So you guys know I took that recent scalp on UROY. We went over that one on stream. It was a 7% stop loss. It was a 25% upside target. Played out beautifully, 3.6 to 1 risk reward ratio. Locked in those gains. Kept 1/4 of the position open. Why did I do that? If you put $100 into it, it went up 25%. You know, you end up with $125. So you take your $100 back out. You let your 25 ride. The truth is, though, you know, if it starts looking toppy when it gets back to those levels, I was actually hoping I would overshoot a little bit and come up to like 314 or like 350. If we do hit those levels or the top of the range, I will probably close like another half of that position. So then I'll have like 12% of the original position open, but it obviously would be worth substantially more. You could close the whole position if you wanted, could close another position. But again, you know, that would just be essentially from our initial entry, from our initial entry, you know, 51% instead of 25%. So, but yeah, I mean, I'm not even going to do like the whole deep dive on this one. It's clearly in a descending channel. This one's trading pretty technically, and it's been pretty weak lately, very clearly in a bear market. It saw a big move to the upside, but it's been such a dog that it didn't even, the chart looks completely different than the rest of them. You know, and is that because it's a royalty company? Is it because of something else? Sure. All right, so that is it for our uranium sector stuff here. So that's it. We're going to wrap it up there. Crypto Trend Trader with our Wednesday evening mid-market wrap up. It is 10:38 p.m. Eastern Standard Time on August 24th, 2022. Obviously, I am Crypto Trend Trader, and obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. And of course, trade responsibly. Crypto Trend Trader, and I'm out of here.